Hi guys, I can see you starting to trickle in. Nice to digitally see you, for you to see me, and I can't see you. Um, I like seeing names that I know. Every time we do this, I know more of the names that are on the attendee list, which makes me feel a little bit less like I'm talking to a blank screen and more like I'm talking to people that I know. So I really appreciate that. So thanks for joining us and for being part of the community. I love our community. It's my favourite part about the work that I get to do. And the thing I'm probably most proud of in what we've created as a group over the last year or two. So my name's Kerrin, for anyone who doesn't know me. I work with Betfair in Australia. And this evening, my co-host, I guess, is Paul Smith, and Paul's been kind enough to give very generously of his time, effort and energy in the community space, including being prepared to talk about some of his learnings tonight. So I'm very grateful for that. Just before that, a little bit of background for anyone who is sitting here going, well, why are you doing this? Why are we here? From Betfair's perspective, we have a philosophy of winners being wanted on the exchange, of actively trying to create more winners. Now that's all well and good. And we can give you all the tools that we can, all the data, all the support that we can to help you be a winner. But even if you win at the game of betting, you still need to also win the mental game. Now, this is something I've been interested in for a long time. I find psychology fascinating, and since the beginning of working with Betfair, one of my big things around automation is getting out of your own head and getting out of your own way, because often we're not our own biggest supporters in this space. We can be a bit of a detractor, and the further you get on your wagering journey, the more and more important that mental game gets. While it's all, sort of social and a bit of a hobby, it doesn't matter as much. Obviously it's to be good to be in a good space, but it doesn't fundamentally impact how successful you can be. The further up that curve you go, and the more semi-professional, professional your wagering gets, the more and more important it is to be on the right side of what's going on in your head, so that you're not getting in your own way, so you can handle variance, so that you can have a positive relationship with your wagering, and a professional one. So Paul, in his very generous nature, has come along tonight to share some of his learnings from the last more than a little while of being semi-professional on the exchange. This evening, if you're not already, I do recommend jumping on the Betfair Quants Slack community. It's a great way to follow the conversation as we go. There's a meetups channel on there. If you haven't joined already, jump on. Ash has just shared the link down there, so thanks, Ash. Anyone who's watching this recording later, if you can't find it, shoot us an email, automation@betfair.com.au, and we can send you an invitation to the community Slack group too. But it's a great way to be able to sort of have the conversation as we go, and also continue it afterwards. After the session tonight too, we will be carrying on for what I call like a online pub session. I'd love to take you guys out to the pub properly, but at the moment all around the country, this is our version. I'd love to hear what you're doing and what you're up to. So anyone who wants to hang around for that afterwards, you're very welcome to. So a little bit of housekeeping for this evening. Through the session, feel free to drop things in the Q&A box, any questions that you have, and we'll certainly look at those as much as possible during. If there are any that we don't get to, we'll follow them up in Slack afterwards. But also the chat will be live if you want to use that to chat to each other. But I recommend that it's better if you jump across to Slack and have the conversation there, just because it's more engaging. Anyway, no further ado, let's get Paul on here, and you can stop listening to me and start listening to him. So, Paul, hello.
Hey.
Hi, thank you for this evening. You're well known in the community, and I'm very grateful to you for putting your hand up and offering to do this. For anyone who doesn't know Paul comes from a programming background. You still work your day job as a computer, sorry,
Data
computer
architect,
science
but
dev, yeah, primarily.
yep.
But you've also been pretty serious in the wagering world for quite some time now, yeah? How many years are we now?
I'd say we're at least 15 years, probably.
So just a little while. And still finding new edges, which is always nice. But this is less to talk about your age, but we'll give a little bit of a context to that. So high level, you're all model based and you're mainly automated in what you do, right?
Yeah, so everything's custom coded. Started originally with just finding edges using simple statistics. Looking at what has that slight edge and doing some easy analysis just using some SQL. But yeah, moved into the machine learning models and I create quite a few of those.
I love listening to you talk about what you do, how many different models that you have. That it's not that you have one or two or three strategies,
Nice.
and they're constantly evolving and it's so much more sustainable.
Yeah, I generally got about 800 that I'm monitoring closely, and then there's thousands after that.
Just casually. My favourite story about you, and I remember from the very first time I met you in Melbourne at an event years ago, you told me the story and it stuck with me ever since, of only ever putting one deposit into Betfair, right? How much was that for?
So I did it for 100. That was it. You either win with that or you lose it. And if you lose it, that's the end. And
you didn't lose it?
I didn't lose it. It's built up to a very nice little sum now. So
nice. And I remember you saying even at the time that, and this plays into what we're talking about tonight, is that sort of mental game, that it made it easier to sort of deal with some of that variance and also some of the social things that come around doing this semi-professionally. I remember you saying something about your wife being more happy because it wasn't on anything that you hadn't, it was all on ups.
That's right. It's always up. So I do lose.
No one likes to lose.
No one likes to lose. Dealing with those losses is definitely part of the fun of, or not so much fun of gambling. But yeah, it's easier to tell your wife that you've lost thousands of dollars when it started with 100.
Yeah, and when you haven't had to, it's you're losing your winnings, not losing.
That's right.
Other things you put in. Yeah, I can certainly appreciate the distinction there. So this evening you've got a bit of a slideshow that you've put together as a sort of backdrop of what we do. If you want to share that might be useful.
Yep, we can start going through that. Let me.
And then I promise I'll interrupt because I'm very good at that. But I'll leave it with you to sort of drive.
You good?
Yes, I can see that.
Okay, so I've put this slide pack just so I could at least prompt myself on a few of the areas that we can talk through. But I guess because I've been doing this for 15 years, I've gone through, starting with a very small bank, moving that up to a reasonable size, a few $1,000s, and then, taking that up into the hundreds of thousands of dollars. And bet sizes generally move with that as well. And part of that is really, as you get larger and larger bets, you need to deal with the mental aspects of what we do. So if you read any books, particularly Tendler's book, he's going to break it down into several areas. It may not seem, he doesn't exactly call out these areas, but decision making is one of those areas, which is all about the biases that you're going to have to factor in with your punting, because you're going to have hindsight bias, recency bias, anchoring bias, survivorship bias. There's quite a bit that actually goes into making decisions and whether they're profitable decisions. And that's for people that do form analysis plus people that actually do modelling. There's the emotional aspect of it, and I know my family and friends would definitely call out that the emotions used to get to me a little bit. a lot less now. I did always try to push my bet sizes probably a little bit too far. That is part of the game. You need to push your boundaries a little bit. But emotions can have a big impact on the decisions that you do make. A couple of other areas of focus, how well you can focus on what you're doing, the motivation, keeping that motivation, which is quite simple. You'd think it's mainly, you're motivated to make profit, but there's a few things underlying that. I think a lot of us at start, especially in the automated world, it's more about the challenge. Can I beat it? Yep. And eventually you do beat it with enough work. So what's your next motivation after that? Do you need to, get into new sports, look at different angles?
Beat a new challenge?
Yeah. It's quite a bit. Confidence is another area that tends to affect people a lot. And you can see that on the Slack channel. People are winning and losing, and just the terminology they use and what they talk about. And then learning, obviously, we're always trying to keep up with our learning, but there's the inchworm model, which Tendler talks about around learning, which was quite interesting. And I'll touch on that. But the main topics I'm going to talk through are dealing with emotions and how confidence really affects, especially our bankroll with confidence. Because those two are fundamental to what we do in punting, and it affects anybody, whether they're doing form, whether they've got automated models. Even though you can take some of that emotion out by automating it, there is still a lot of emotion that comes in.
Yeah, I completely agree with that. And I think we see that in the Slack community as well. Most of the people there are all automated, but that doesn't stop you going along for the roller coaster. I talk to a lot of people who aren't automated, and they sort of go, "Oh, I wish I could be, because then I wouldn't be as involved." It's like, well, that's only true to a certain extent.
Yeah, that's right. So you still feel the losses, still money coming out of the account, even if you think you've got an edge there, and it should be winning long term. It's hard to deal with those short term variance. But there are ways that we can deal with that, and I'll jump into a few of them that I actually do use that have helped. Okay, so as you said earlier in the intro, different punters generally have different bankrolls. You've kind of got that recreational punter that'll go on a weekend, and some of them might bet, a few dollars up to a few $100, maybe a few $1,000 if it's their once out Melbourne punter trip. But really, they're not too worried if they win or lose. They're there just for the enjoyment. But then some of those will actually want to, move on and look at it a bit more seriously, and I've termed them the novice punter. They're kind of going to have a set bankroll. They're going to have bet sizes. They're going to look at how they can get an edge, or they're going to start doing form analysis a bit more seriously. Their bet sizes will generally be a bit more constrained, and that $5 to $20, maybe even $50, where they're going to go through, and if they lose a few, it's still not going to hurt. But they're going to feel those losses, but it's still, if you lost $1,000, most people can recoup that money from their bank account, especially if they're betting with money they can afford to lose, as you're always told when you're gambling. But then you'll start to get to the people that are break even. So they're starting to make a few months of profit. That's where you're going to start to get some increases in your bankroll. And that's probably one of the more dangerous stages, where they get on a bit of a run and they don't understand variance, and suddenly they increase their bet sizes a bit, and suddenly they're going to lose their entire bank and start again. Again, at that level, we're still only talking, four figures here, so less than 10,000. Again, they can cover it with the job. It's not a major issue. But once we start getting into the profitable punters and the sophisticated punters, those guys have built their bankrolls up to significant levels. And no matter what anyone says, it is not just a percentage of your bank that you're going to lose, or a unit, or a number of units. Losing $30,000 is a lot more than losing $30. you're not covering that with a day job anytime soon. You have to win that back.
It's also something where you know the value of $30,000. You know what
that's
it's a couple of years of private school. That's very real, tangible.
That's right. I normally put it in terms of that's an overseas holiday that I've lost, because that's generally what I use my winnings for. So I've kind of broken it down again that different punters also have different problems. So you've got the recreational punter. It's fun. It's exciting. They're there to learn. They can try to minimize their losses on a weekend by using someone's tips or something. But as you keep progressing, there's going to be different problems that you run into. So the novice punter has those decision-making issues. The break-even punters now got to start looking at their confidence and emotional control, because they'll have those winning runs and those losing runs that can really affect them. And the profitable punter really needs to look at confidence mainly and motivation, because they're starting to win and they need to build up that confidence and not let it affect their bankroll. And then once you get to the sophisticated punter, it's more about learning and keeping that motivation going. I do myself even find that sometimes you can lose that motivation, mainly because you've beaten it.
Do you think people sort of move between those sophisticated and profitable categories and can oscillate there a bit?
I think so. You can definitely, as you're learning, especially as a sophisticated punter, you'll keep learning. You'll try new sports, you'll try new models, new systems, different form analysis. And when you do that, you can start to take a few losses because you're trying out new things. And that can then dent your confidence, which then you can either have smaller bet sizes, or you may pull back on what you're actually betting on. I know that's a big one for me. So I'll tend to get into new stuff. I'll have new models come on and they will go through a losing run, as they sometimes do, and that hits your confidence. Confidence essentially gets built up by being able to recover from the losses that you've had previously. So when you change something and you have a loss, you don't know if you're going to recover again. Mainly because you've made a change. Obviously, you can go back to what you were doing and then just continue from there. But the punting game is very interesting. It does change all the time. So
you can't just stay with the same things. It just doesn't work a long time.
No, that's right. So COVID definitely, a lot of the strategies that I used didn't work in those type of markets. So I took a fairly big hit during 2020. So I think 2018, 2019, I only lost 1 month in total out of those 2 years. 2020, I think I lost 5 months. And I know, I could see why. There was a lot more money in the market. That was...
and different money and
things change. I call it uneducated money.
There's a lot of overseas money. People who didn't know our markets,
And my methods generally work on the knowing that there's smart money in the markets. So that's okay. I just had to work through that, find out what was still working, what didn't work, and adjust. The markets this year are they seem to be back to normal, and I'm back to what I was doing pre-COVID, which is good. So I'll jump into it, but there's a couple more slides just before I get into the emotional aspects. The first one is something that I've read a lot about, and I see this happening quite a bit with people. And you saw it during the COVID period a lot. So the locus of control is basically how people see the world and how they interact with it. So you can either have an internal locus of control or an external locus of control. When it's external, people see it as things are happening to them. They don't have any control. They lose because it's bad luck or something happened. You saw it with the political bets that went on recently with Trump. Everyone blamed, that lost betting on Trump, blamed that the elections were rigged, rather than actually taking it on that maybe it wasn't a great bet to place. So the people that do excel in punting, trading, any kind of business are those that are going to take that internal locus of control mindset. So you need to kind of know that you can have an edge, you can make things happen, you can learn, you can adapt to the markets. If you're not going to take that and you're just going to say, well, my team lost only because this one player did a bad thing or something like that, you're never going to really be able to learn from your mistakes. And it's learning from your mistakes in how you actually get your edge.
Agreed.
So if you read Tendler's books and a few of the trading books out there on psychology, you'll see most of them have a very general approach to how to handle the mental game. The first bit is knowing what's happening. So you have to be aware of what you're actually thinking and what you're doing. And sometimes that's not as easy as it sounds in the moment. But if you can identify when you're doing something and what your emotions are, then you can start to look for those patterns that you need to interrupt, which is step 2. You basically need to find a way to adapt to what is happening when those things aren't quite right. So Tendler talks about interrupting the patterns a lot.
Yeah, injecting logic.
That's
yeah. I think for me, that was one of the biggest takeaways of his book, was that sort of just stop before you get to that place, whatever that place is.
Exactly. And it's a matter of identifying. If you're not even aware that you're doing it, you're not going to be able to inject that logic. Yeah. But once you can inject that logic, you can stop those losses from occurring. And punting is as much about minimizing the losses compared to your profitable bets.
I think a good example here, right, is where it's easy to play out in the manual betting world. You know, you're betting on the racing. You know, you maybe you're doing it off the radio and you're listening to a race caller. The race caller gets it wrong. You've just gone hard on the one that they call, and you take a really big loss, even though it's not your fault. And then you're like, crap, I need to win that back. And then you go on that tilt. And then your heart starts racing, you lose your edge a little bit, and you're not as focused, and therefore you don't listen as well, your reaction time isn't as good, and then you go on that downward curve and you go on tilt. Whereas, I suppose to walk the example is to recognize at the point at which, race caller gets it wrong, you have that big loss where it's like, okay, I can see this could be a trigger for me. Well, actually, that happened. We move on, next race, and being able to self-regulate that instead of go down that spiral, right?
Exactly.
And for you, not turning your model off just because you've had a bad day on the
exactly
on the new thing you're betting, unless you know that that's what you should be doing.
Yeah, well, I do have a stop point if things are going wrong, and everyone has that limit that they will go to, but hopefully you don't hit it. Or if you do hit it, you do stop. And so for some people, that is the end of their bankroll. It's $0 when they stop. And the third part here is actually taking the time to reflect on what happened and to look at the strategies. It's hard to come up with strategies when things are happening, especially if you're emotional. It's much better to do it when you've got a clear head and you've got some time to think through all of the options. So
and I suppose the thing there, Paul, is it's not just, so 2 bits. It's reflecting on your betting strategy, which we do. We're pretty good at that. We spend our whole life tinkering with models and checking the results. But then it's also stepping back and reflecting on your mental strategy and going, well, okay, that was less than ideal in our scenario of going on tilt after that. Well, what am I going to do differently next time?
Yeah, that's right.
Yeah.
Especially if you bet more, or you start getting a bit more reckless with your bets, or you turn your model off because you had a bad day, all those kind of things. Yep.
Same page.
Yep. Okay, so emotions, which is one of the topics. Obviously, everyone knows what emotions are. And what a lot of people think is that if they acted like a robot and they automated what they did, that would take the emotion out of everything. And while that's true to a degree, it does take the emotion out of actually placing the bet and being able to put some rules around what selections you take. It doesn't take the emotions out of the variance and the swings that you're going to have. And those emotions can actually make you turn off your models, make you change your bet sizes, make you add new rules in that really don't make sense, which is something that I know I've been guilty of.
Overfit.
Yeah. So exactly, overfitting. And you've seen a loss and it was a big loss and you add a rule in just to take that out, but realistically it happens once out of the blue moon and is a very profitable thing that you should have left in. So emotions definitely can still affect people even if they're automating things. And they've proven that when people get emotional, it actually shuts down the higher brain function. So we go back to just essentially reacting and you just do what comes naturally. So if you haven't really looked at putting a strategy in place, you'll just do something and it may not be the right thing. I know Tendler talks about that a lot in poker players and how they go on guilt.
The things that you learn to that point of unconscious competence, right?
Exactly.
Yeah. And one of the interesting things for me was that he's not just talking about when the negative emotions happen. It's sort of part of what we're going to here, but like it's also when you get on a high and then it's really easy to up your stakes or whatever, but equally you go back to that sort of core set of things that aren't necessarily the best set of things.
Exactly. And look, it's even emotions that people wouldn't think. So like guilt, some people might feel guilty about winning other people's money on the exchange, knowing that they're, some people that do gamble are problem gamblers and taking their money. Can be stuff like boredom as well. People can get bored and they just go through. So they start to take those action bets, as they call them. Just want to see a little bit of action. I've sat here for, 5 races and not had a bet. I want to have a bet and have a bit of fun.
I've seen people do that with their models. They're like, my model's great, but it only strikes a few times a day and I'm just bored. So I'm going to turn one of my more interesting ones on.
Yep.
Yep.
Been there and done that. Sometimes it works, sometimes it
doesn't.
So if people haven't done any of the psychology stuff, they probably haven't heard of the Yerkes law. But it does come up in every single psychology book, especially when you look at the punting books and the trading books. So essentially it's a measure of the arousal versus performance, and it's about being in the right emotional state. So not being too bored, but also not being overexcited, I guess, either upset about something or too excited about the wins that you've had. If you're not in that actual mid-range, you're not going to be doing it to your peak performance. So a lot of what the psychologists will try to get you to do is get you into that arousal that's in the middle. And there's ways to do that depending on what you're doing. If you're talking about modeling, it's generally it's about setting up your environment and having a certain place where you do it or a certain time, or a certain pattern that you actually do, like, go for a run and then come back and sit down and do your models. It's all about creating that consistency and getting your brain into the right state. So a lot of people, again, we talked about it with that higher brain function. Once it gets too high, that's what happens. And you need to inject either some calming logic that's going to settle you down and get you with some rules or something, or you actually need to, if you're bored, you need to actually get interested. Otherwise, you're not going to learn.
I know I've got some clients who are in-play traders, manual and they talk about how boring it can be to sit there race after race and just effectively do the same thing, and how they have put very real strategies in to keep them interested between races, to keep their brain there, to keep the that engagement, as well as for them taking time off too, like having a day that's a weekend day, because it's easy to do all day every day if you're printing money. Like it's actually, you feel guilty for taking the time off, but then that can let you keep interested in what you're doing too.
Yeah, well, with the automated, you can, if you do get bored, you can tend to leave it running and not work on it.
Which is dangerous too.
Just get de-interested with everything. Just come back and check it, once a week or something, and collect the money. Eventually, you will lose your edge. So,
as you said, COVID. Sometimes that happens quickly.
Exactly. So the next slide is definitely something that affected me during COVID. And this is really about accumulated emotions. So this is something that really stood out from the book, from Tendler's book, for me, because I could see myself going through it at the time.
Yeah.
So essentially what I've got here is 4 losses. It doesn't have to be 4 losses. It could be 10, 20, 30. But everyone has a breaking point of where the losses add up to be painful. So when a lot of people look at their models, or they look at their risk of ruin, maximum drawdowns, they look at it consecutively. So, I've got a 50% strike rate, therefore I'm only going to lose 4 every 12.5%. So 12.5 times out of every 100. But that's not really what happens. You might lose 4, win 1, lose another 4, win 1, lose 5, even with a 50% strike rate. And eventually those losses slowly build up on top of each other. So you lose 1, you lose 2. The second one's a little bit more painful. The third one's, for me, is getting a lot more painful. And if I had four losses in a row, I'd really feel it for my strategies. Generally, because if I'm losing 4 times, I'm getting close to that $30,000 plus kind of loss that I'm
not so comfortable with.
Breaking point, I would say.
Yep.
Where I can feel it. Anything under that, I know I can recover from, and I'm not going to worry. But if it gets to 30, I've probably blown what my maximum drawdown expectation was by at least 30%. And I'm starting to think, what has changed?
Yep.
And look, it doesn't have to be just losses either. So during COVID, everyone was a bit stressed, being locked up. So all those extra stresses just made those losses feel just that little bit worse.
Homeschooling, some people out of work.
Exactly. So there's a lot of things that can affect people and their punting. It's not just the losses, and they all add up. And understanding that they add up was a real interesting thing for me as I was actually going through it. I could see it. Jump on. So how do I actually deal with it? So this is where we get into the interesting stuff, how to deal with it. So I journal. So when I say journal, it's not like I had a great day, I had a bad day. I actually do mine in the morning, mainly because I work on the last 24 hours. Mm-hmm. So I bet up to midnight, and then I record my daily results based on that. So in the morning, I'll get up and basically have a look, and have a look at how many losses, wins, what kind of profit I made, what I didn't make. And as you do that, you'll start to think things. So I know a few of those are generally, I'm winning. I should be increasing my bet size. I could have made so much more money. And that's one that I sometimes need to pull back on. Mm. Or I've had a loss and I need to go investigate that loss, but I need to be careful about not introducing any rules that tend to overfit the models.
Or over correcting for a perceived flaw where variance is. We'll pick that up in a bit, but I think variance is the one to really pick up on when you've got a chance.
Yep. So I'll generally go through and write down, had this loss, I'll watch a race, I'll see what happened, understand what I'm looking at. But what Tendler tends to do is, when you're trying to deal with emotion, he kind of breaks it down into 3 areas. And I try to work out if what I've done or what I'm thinking is in one of those areas. So one of those is just a learning error. You're still learning stuff. Generally, I don't have too many learning errors anymore. But if you say you're a new punter, you had a loss because you didn't know something. You didn't look at the pace map, or you didn't know that a player wasn't playing in a particular team or something like that. And from those, you can generally write some rules that will dramatically increase your profitability. The emotional mistakes are the ones that I tend to get hit by more even now. And that is generally, as I talked about, wanting to bet more or had losses, and wanting to put in correctional rules that just don't make sense. And then there's also those frequent marginal mistakes. Now, they're really hard to pick up on. And you kind of pick those up over the months, not really on the day. So you want to go back through your journal every week and month just to double check, see if there's any patterns on particularly how you're writing things, so words that you're using, whether they're positive or negative, really, to kind of get your mindset. I found that to be really, really useful. But when you do notice that you have made a mistake or you're feeling it, what he suggests, and what I actually do as well, is I tend to write down what the emotions are that I'm feeling. And that may also include things that lead up to that emotion. So, I've had a bad night's sleep, stressed because you're working a lot, or stressed because you've had a few losses. It could be anything. You went out drinking too much, you wake up and you feel horrible.
You're distracted, yada, yada.
Yeah, exactly. So you tend to go through that, and you kind of I give myself a score each day out of 10. How do I feel? Am I dealing with it okay? Am I not? That way you can have a look at how you were feeling again when you go through the reviews. And as I said, you want to do those reviews, just pick up those mistakes. And it's the patterns. It's identifying those patterns so you can put in that logic to be able to correct yourself. And as I said, my biggest one is I want to bet more, and I need to stop myself from doing that. And I'll explain why pretty soon.
Can I jump back to the recording one, Paul? So part of what I found very interesting in the Tendler book was how he talks about making note of an approximation of how much you think variance impacted those results. So do you think that your winnings were above average because of good luck? Or do you think that you were losing more because of poor variance? Because obviously in the automated world, that's the elephant in the room, what's variance and what isn't. Do you do any of that? Is that something you
I tend
record?
to, yeah, so I use variance, a measure of variance. Essentially, I know what my average profit is that I'm looking to get for a month, that I have over history worked out. And if the month has been higher than that, I tend to discount and say, well, that was just a positive month. And if I'm under that, I tend to go, well, I've had a bit of a negative variance month.
You do that on a monthly basis instead of daily? Cool.
Yep. It's too hard on a day. I think even though
in automated
100 bets in a day, variance on 100 bets can be significant.
Yep. No, completely. I think probably it gets more relevant if you're not automated. If you're manually trading every race, and you can tell that you're well up on normal, and probably because you're a bit closer to it. Yeah, I think you can probably gauge a bit more where it might be positive or negative. Yep. But yeah, it's just interesting whether you do that monthly, whether you do it weekly, like where those barriers are. No, it's interesting. Thank you.
Yeah, that's okay. And the last bit there is coming up with a shortcut. So how do you actually deal with those and inject that logic to stop it from occurring? So I have essentially three reviews. I have my daily review. So what's happened, it's essentially journaling it. I also each day try to come up with a few new ideas to like angles or edges, because
800 models isn't enough.
That's right. It's not. There's always new sports to look at and new ways to look at stuff. Weekly reviews. Again, the weekly reviews, I'm generally looking to see if I'm falling into a positive or negative state. I'm looking for those patterns. And then I've got the monthly reviews where I'm looking at the patterns that have come out and what strategies I can do to deal with those. I think I've kind of got that under control now, so there's not much I change now, but the first few months, definitely that was an interesting monthly review to see what you actually go through.
I think it's interesting how much this reflects on how you manage a model at the same time. You know, that how you manage your mental game and how you manage your betting game. You know, those two things here for someone like you, I think actually tying pretty well in hand. You do look at it daily and you do review it daily, but you try not to do too much. You know,
Exactly.
Weekly you're looking at and you're looking for big outliers and maybe making changes on those things that are obviously really good or really bad. But then most of the changes are happening in that sort of monthly review period.
Exactly.
No,
it seems monthly seems to be a good period for me of where I make changes, especially bankroll, any bet size increases, stuff like that.
Does that partly help you to short circuit doing it emotionally? That when it's a monthly thing, so. It's not just on the spur of, it's intentional.
Exactly.
I like that.
That doesn't mean if I've got a big loss during the month, I won't just, if I've hit my pain point, I've got that stop loss, I will stop. Doesn't happen too often though. And one of the things that I do out of the journal is essentially put in at the back of it what the situation is, what I was kind of saying to myself, and I've put one in here that I do a lot, what the consequence is and what would a coach actually say. So that's where you're trying to coach yourself. So my situation is, you know, I'm winning, I should be betting more money. The consequence of that really is that volatility and variance increase. Well, variance increase, but the volatility of the ups and downs on your bankroll do increase, and sometimes your bank can't handle that, and you'll have to deal with your emotions a lot more. And obviously, if I was a coach coaching myself, I'd say just deal with those winning runs and losing runs. And you need to actually stay in the game, not wipe out your bankroll. And betting more is you're going to wipe out that bankroll.
Yeah, the ups are bigger, but the downs are bigger too.
Yeah.
Yeah.
So I've got a few of those in the back of my journal that I tend to read those at least every month. And especially if I notice that I've got those kind of self-talk things where I'm moving, I want to bet more, or I've a few losses and how am I dealing with it? And they do actually work. Like, it may not seem like it, but if you do it enough, you tend to be able to deal with those emotions a lot better. Now, confidence is an interesting one in betting, and I know we're starting to run out of time, so I'll go.
No stress.
So confidence is interesting. So you either can be overconfident or underconfident a lot of the time. So overconfident, you really, you know, you've got a lot of optimism. You're not really fearful of what's going to happen. You think you know what is going to happen and you're going to win. When you're underconfident, that's generally happened after you've had a few losses and you've got that fear that every next bet is going to be a loss. And that, especially if you're a manual punter that's doing it race by race, underconfidence could stop you placing those next bets. Generally not a problem for those that are automated. The program will just go place those next bets for you. It's more about whether you're going to turn that model off. I find that being overconfident is definitely more of an issue than being underconfident for a lot of people, and that's because of incorrect bankroll management. They tend to overbet, and you see it quite a bit. So you see a lot of people, and this isn't just on the Slack, community. It's mainly on other forums. They will come in and say that they've got a wonderful model. It's going to do everything they want. They're going to win so much money because they've back tested it. And then they put their selections up for a week and it has a horrible run.
May or may not be reality, like may not be within the scope of the model. Like it seems to be outside of the scope of normal deviation, how often the first week of a model goes badly. I've seen that across so many people, even when it marries up with, with the model.
Yeah. Generally,
but people get all excited.
They start posting it when they're excited because it's had a good run. That affects bankroll. That's, I think, the biggest issue with confidence. So an interesting person that I heard about only recently was, and I don't exactly know how to say his last name, is Rick Kerrin, I think.
Kerrin, maybe.
This was an interesting story that I hadn't heard until, about a month ago. He was actually a partner with Warren Buffett and Charlie Munger. And he was like one of the third super investors. And he was in Berkshire Hathaway with them. And he had an amazing run on the stock market in the 1960s. So, of course, what did he do? He went and got margin, took loans out, hit the 1973-74 bear market, which was like 70% loss, and it wiped him out. He basically had to sell all of his shares to Warren Buffett. And he basically leveraged because he didn't think he could lose. He thought he knew what he was doing. He thought he could basically predict the stock market. And then something happened, that black swan event, and it just killed him. Now, he was smart enough and he made a lot of money after that, but he obviously lost a lot of potential money that he would have had with those two guys.
And there's a reason that we know how to say their names.
Yes, that's right. And never heard of this guy.
Yeah.
So what I generally say is winning runs kill bankrolls. When you're losing, you don't tend to overbet. You tend to pull back your bets. But if you've just gone on a really good run, you've hit the end of the month, you've doubled your bank, so you've worked out that your drawdown during that month was only 10%, so you decide to quadruple your bet size instead. And then you sit and you go, well, it's going to come back. I haven't had a drawdown this big. We tend to look at that with a bit of hindsight bias by looking at what our previous month has done, what our previous drawdown is. And we take those shortcuts to decide what our bet size is. I know I do it. I have to stop myself from doing it quite a bit. But if you have a winning run, it could have been a large positive variance. And then you hit that negative variance and suddenly you've lost half your bank or more. So a lot of people, especially even in the trading world, tend to kill their bankrolls after they've had that winning run, rather than a losing run and being a little bit more cautious. So obviously understanding that, you need to know your risk of ruin and what is the probability of the losing sequence for your bet size. So if you're going to bet 5%, that means you can really only handle 20 losses. Now that's 20 consecutive losses, but that could be, 15 losses, 1 win, and then 6 more losses.
Yep.
That's where you're using Monte Carlo simulations, and you can download a whole bunch of simulators off the web, or there's even ones you can just put in the web and it'll give you the answers. They can go through and run the numbers and actually determine what your risk of ruin is based on your bet size. And you want that to be, almost zero, if not zero. So I tend to have mine very conservative because I don't want to wipe out my bankroll. And again, if you've got 100 bankroll, it's probably not a problem. Bet more. You probably want that acceleration early. And if you're willing to take a bit of risk with $100, that's not a problem. But when you've got, say, $300,000, you don't want to take that risk.
Yep. No, I definitely follow that. And I think you're right. I think we get in our own heads, and that's a big part. Particularly, we look for the data to back up our fundamental belief, and our fundamental belief is that we've got an edge.
Yep.
And therefore, when we also have the real data to tell us that that's right, it's so easy to overvalue that and overreact. I think
exactly.
of everything, this is, I think, the real crux of a lot of it.
You've
and
got
then
to
being disciplined on it.
Yeah, exactly. Being disciplined is a bit of a problem for everyone, I think. You've just got to try to. You'll see this out of Tendler's book. It's understanding your A, B, and C games. And your A game is obviously when you know you're doing everything right, you're focused, your decisions are right, you haven't got too much variance. That's generally when you're winning a lot. Your C game is when you are distracted, you're making bad decisions. Tendler tries to bring your C game as close to your A game as possible with his inchworm analogy. You want your bad game to not be as bad as it was. Because if you bring that up, then you can move your A game forward.
I really liked that as an approach, that it's not just about making your goods better, because everyone focuses on that. Whereas, this is trying to smooth out effectively that variance. And It's funny because when we teach kids, often we do focus more on fixing the C game, that we, I've got a toddler, it's far more about how to manage the tantrums and, but then as we get to adults, we're like, we just want to get the good stuff better. Whereas, I completely, particularly with anything like this where variance is killer, you need to be as consistent as you can be, and getting your bad to okay, your okay to good, like, is even more important in a lot of worlds than getting your good to excellent.
Yeah, that's right. Exactly. So we've talked a lot about variance. I'll jump. I don't know how many people have read the success equation, but there's one particular model that comes out of that around luck and skill with the 2-jar model. Mm-hmm. So essentially how this works is one jar has luck in it and one jar has skill. So if you think about luck, that's your variance, right? So it could be positive or negative. So, a horse gets stuck behind another horse, or a player gets injured at the beginning of the game, something like that. And it can be positive or negative. So you could also have, your horse had a dream run and everything opened up right in front of it. Or, as I've seen with some dogs, they all run into each other and let your dog run straight past them. Then you've got your skill level. So your skill is what you can contribute and what you can actually affect in your potential bet. So you've got different ranges. So your skill in one game might be completely different to another game. How his model works is you basically take a number out of the luck and the skill jars and add them together. And if it's a positive number, well, that means you would have won. And if it's a negative number, that means you would have lost. So even though you could have had more skill in a game, that say the second one there where I've got -6 and +1, you had more skill than the average person that was betting in there, but just there was a bit of luck that didn't go your way. So you've actually lost. And what you want to try to do is have enough balls in the skill jar that can offset the luck jar.
I like that.
Build that up, obviously, with experience. But it doesn't matter which, if you're going to play in poker, sports betting, horse racing, there's still going to be some kind of luck involved.
Yeah.
And that's what basically variance is. It's just how does your skill go against that luck.
For me, I'm very visual and that works very well for me. I like the balance of the two.
Yep. So how do I deal with confidence issues? I tend to use another jar cup method. So you have 2 cups on your desk in front of your computer. One of them is for good days, one of them is for bad days. Now, a lot of psychologists talk about coins when they're doing this. I don't use coins, I use chocolates.
Now you speak my language.
Yep. So when you have a good day, you followed your processes, you you didn't get swayed by the emotion, the chocolate in one side in the good day cup. And when you have a bad day because you've done something that you shouldn't have, you put it in the bad day cup. And when my cup gets full on good days, I get to eat the chocolates. And that kind of gives you a little bit of a reward for following the process. And if your bad day cup gets full first, then you have to chuck your chocolates out from both cups.
Ouch. Now there's your motivation right there.
That's right. So that helps with the confidence. That's mainly for dealing with the volatility, because now you can suddenly see, I do have more good days than I do have bad days. It's a visual thing that helps you after a bad day know that, yes, okay, I have a bad day here and there, but look, my good cup is a lot fuller.
I really like that one. I hadn't made that one before you shared it with me earlier, and that, it plays very well.
Yeah.
And I think plays the psychology very well.
And the last one, for me, overconfidence is extremely hard to control. So I use rules. So rules tend to, if you follow them, help you a bit. So particularly around increasing my stakes, I'll only do it at the end of the month, and I'll look at what I believe the variance was compared to the average, and I'll take that variance off and adjust my bet size based on that. That's if you're increasing your bank. We all tend to want to increase our bank to a point. Eventually it gets to a point where you don't need to anymore. You're just pulling out that money. Obviously, if you don't have that rule, I would tend to, some people just keep increasing it after their winning runs, and then eventually they'll have a really good run of positive variance, which will mean that when that negative variance comes, they'll get hit by those increased sizes.
And is that for you partly about making sure that you never bet above where you'd be happy with that drawdown going? Like
exactly.
Looking long term and going, well, if 30K is my number, if I could hypothetically lose 40K on this, then I'm not going to go that high, even though I know that.
That's right.
Yeah, that's a big one for me, is getting people to talk about where they sit on that risk tolerance. And if they know that they can't cope down here and they'll turn it off before it's going to go back up, well, you shouldn't be staking like that.
Exactly. It's interesting when you talk about the losses and that. The psychologists say it's basically a traumatic event every time you take a loss. So the techniques they use are trauma related. So if someone went through a very traumatic event, like they got attacked on the street or something like that, the exact same techniques are used to help traders deal with the losses that they get. It's very interesting when you start reading into all these things and all the methods. Now, I've tried out other things. These are the things that have worked for me, essentially. And look, they may not work for everyone, but definitely worth trying.
I think part of what I like about this is it's all practical stuff, and that's what I liked about Tendler as well, that it's not positive visualizations and taking a deep breath, and like that's great, and that stuff is important. I'm not discounting that, but that's not game changing. The same way that doing the work is, in the same way that you don't expect to get a profitable model off a couple of hours work, but we do expect to have an A grade mental game on a couple of hours work. Like we have these different standards, and I think that this is about very practical, real work that you can do to improve that game.
Exactly.
Yeah. And even if you take one or two of them, like I think there's a lot of value here.
Yeah, if you don't do the work, you'll tend to still get hit by those emotions. Yep. I think that's pretty much it. I did some further reading things here just in case people want to read a few things. So obviously Tendler's book is one that we talk about a lot. But I did find the Daily Trading Coach. Now it is about trading stocks, but that has stacks and stacks of great lessons in that.
In some respects, that's about as close as you get to the world we live in, isn't it?
Exactly.
That anyone's likely to write about.
Yep. So yeah, so that pretty much covers it, I think. Yep.
That's excellent. I will definitely share those as well. If you want to, so there are a couple of questions here. And guys, if you got any others, please drop them in. So Robert has a question, which is a very interesting one. So in terms of bankroll management, have you ever considered removing the betting or staking function from your own control and separating it off to someone else who's not emotionally involved in the models? Now, that's obviously pros and cons. Is that one where you've had a
I
thought
haven't.
about that either way?
No, generally because I work solo.
But also,
Uh-huh.
a lot of devs and a lot of data engineers are also control freaks. I'm not looking at anyone. I'm not sure whether you'd be able to. Would you?
Yeah, I don't think I'd be able to.
I see the value in it, but
yeah. Look, if you really need to, that could really help.
I think it's one where people who have betting partners can really benefit from that. So I've got some pairs that I work with, and Evo, who was on our January tennis meetup, he's a really good example who, he's got a partner that he works with. And I think that can be a good sense check in any of those judgment calls that, especially if you find someone that you're working with who can be the inverse of you, the balance of you. I've got a decent risk tolerance. My personal life, my partner, not quite as much, that he's he's more risk averse than I am. So, in our personal lives, we're able to sort of balance each other out like that. For me, I think, your suggestion, Robert, it's less about putting it in someone else's hands. And if that's a beneficial approach to you, it's more about finding someone to be that check and balance. That's my take.
Yeah. No, look, it could work. I tend to, as a punter, think that I know better than everyone else, so I wouldn't give away that control.
You? There is a question here. Would you be prepared to share your slides afterwards, or do people just need to watch the recording when it comes on YouTube?
Yeah, no, I can throw it on Slack.
On Slack? Oh, you're a good in. So yes, it will be on Slack. Tom says, markets continually change. AJ, your experience with the 5-month negative EV over the last year. How do you know, I love this, we go through this a lot. How do you know if variance is just normal mathematics or, acceptable, or a fundamental change in the market? And it is, Tom, it's a totally appropriate question. It is, for me at least, that is the basis of a lot of that mental game piece, is when do you go from this is acceptable to we need to change it without undermining yourself in that confidence.
So I generally use my drawdown as that yardstick to test against. So if I know that my average drawdown is, say, $3,000 and my max drawdown is 10,000, just picking numbers out of the air, I'll start to wonder if my average drawdown starts to creep up to 6,000, 7,000. If my max drawdown probably goes by at least 30% over, so 13,000, I'd then call it quits on what I'm doing and reassess what's happening, because something's changed, or my model is not working in the current market conditions, or I haven't had enough history to understand all the conditions that could affect it.
So for you, it's sort of having a predefined tolerance bound.
Yep.
That at that point you're not
and it's
happy
a hard
anymore.
limit. Yep.
Yeah. And is that number, presumably it's not plucked randomly, is that based on previous experience, or is it based on your tolerance, or where do you come up with that?
So I always know that my max drawdown isn't the biggest drawdown that I'm ever going to see. So I know it's going to get around that, maybe move slightly above that. I'll generally know, because it works a lot like stocks, right? They've got support and resistance levels. And that support level is that max drawdown. So I'll know that it can draw down that many units occasionally. And if it starts to exceed that, then that's where I really want to check it. And by that 30%, that's a significant jump.
Yeah. 30% below your expected is well. And I think that probably comes down to that. Yeah, it's the same question as how do you manage your bankroll? What's your, do you go with a Kelly? Do you go with flat staking? Do you go with twin? It's the same sort of equation, right? It's find the answer that works for you, but predefine it ahead of time. Yeah.
Exactly. And sticking to it when it happens.
That's the fun part, right? I think hopefully, to Tom's point, like part of that daily, weekly, monthly review piece can help manage that, because you know a little bit more where your head's at and whether you're over reading into what you're looking at.
Yep.
But I think also, like, sometimes that's where there's that balance between knowing the subject matter and not. So, you know, if you don't know racing but you do bet racing, which a lot of people do, you know, if something fundamentally changes in the racing world, and your model outcome changes at the same time, well, it's probably more likely to be a cause and effect than random variance.
Exactly.
Yeah, and I think that's where, for this example, you and COVID, you know, you were smart enough, you were on the ball enough to know that actually the markets had changed. It wasn't just you.
Yep. Still hard to
awesome.
handle.
Yeah, it was a rough year, and I have a lot of respect for you and for your approach, both that you're prepared to keep working at it and to acknowledge that, you know, you don't have a perfect answer, you know, and that you're still learning, but also because you're prepared to share those trials and tribulations and learnings, which I think, you know, I hope that it helps you continue to learn along the way, but it also definitely helps the wider community continue to learn. So I'm super grateful for that. We've hit our hour and we've gone a little bit over. We have one more that I'll answer here, and then we'll jump off and take it offline for anyone who wants to continue the conversation. So this is a very, very interesting question. I think it's a good one. So it's from Scott. What he says is, I've always had a separate account / bank, which I use for fun punting instead of serious punting. And a lot of people do that. Like, I know pros who have multiple accounts and they've got, you know, one that is their punting one and everything else is serious. And he says, after seeing a presentation this evening, he's worried that the negative mental effects caused by the fun bank will bleed into the decisions in the serious bank. Do you think that having the two separate banks is a poor idea? Or is there a way that a serious punter can maintain those separate banks and separate mental approaches effectively?
It's an
Do you have an
interesting
opinion?
one.
That's a very good question.
I don't have a fun account. I'm not going to put money on if I'm going to lose it. I'm not just putting money on a game.
Yeah, so you're not just betting on
race.
the grand final because you wanted tips in Kilda. No, not that St Kilda's ever going to get to a grand final, but
no, exactly. If I'm putting so I have certain systems that run on the finals series and stuff like that, and I do put bets on, but they're all worked out based on logic and past results, and I never really have a fun bet. Even when I watch the games, the in-play bets are generally
the ones, when you call up, it's off the back of your models predictions anyway.
Exactly. Or I'm watching the game and I know that a team is going to win at that point.
Yeah. I think, and this is just my read on this, but I think maybe that is exactly where the value in that whole journaling and self-reflection piece comes in, where if you know you have to and you can acknowledge that, to sort of journal them separately, the same way that, you know, if you have a bad day at work, it doesn't mean that you necessarily have a bad day at home, you know, and being able to go, okay, my punting today was really bad and it's got me in a bad mental space, and being able to acknowledge that. It's amazing how much changes when you acknowledge it and you write it down and go, oh, actually, and that's when then you can put in that sort of, you know, injecting logic of going, this is my fun stuff, and if my fun stuff is starting to impact my work stuff, maybe I need to think about that balance. Or that's a really good question. Maybe on Slack, if anyone does have separate accounts, separate banks, and different approaches that do or don't work, maybe pick that one up, because I think there's something there. Good question, Scott. We're going to wrap that there. Thank you very much, Paul. I know that you are always super busy. You could have your wagering as a full-time job, but you have a full-time job as well, as well as a family. So I'm super grateful for you for taking the time this evening and generally being so active and involved in what you do. And I and everyone else are all very grateful for you.
Well, thank you. It's
Thanks
fun.
for the time. Good. It should be fun. Doesn't mean it always is, so I'm glad it is. Anyone who's interested, we will now be jumping across to a less formal pub session. I would buy you all a drink if I could. Someday we will. But for the meantime, we're online. I think, Ben, have you got the link to post in here? We'll post it in here and we'll post it in Slack. Anyone who wants to is welcome to join across. It'll be an informal, just chat about who's doing what, how the Oz Open went for some people. I know a couple of people have some war stories to tell of that. What we're looking forward to in AFL, autumn racing, all those wonderful things. It won't be recorded. It's just the equivalent of going to the pub. So anyone who wants to join, hopefully in the chat, there we go. Good old Ben, can trust you with these things. It's down there. If you want to, you're very welcome to join in. It will start as soon as we stop this one. And I hope to see you guys there and or on Slack. As always, please, if there's anything that we at Betfair can help out with, me, Ben, Ash, automation team, we're always keen to talk and to help. You can get us on automation@betfair.com.au. We're real people and we're always happy to have real conversations. Hope to see you guys in person and online. And thank you very much, Paul. Have a great evening.
Karen.
See you later.
See ya.
Bye.